Good morning.
Good morning, Professor.
How are y'all doing? I'm so sorry that I left y'all for a week, but I was not having fun in the hospital.
Are you feeling better?
I am. Thank you for asking. I am feeling better. I just feel weak now. Just need for my body to recuperate, and it was intestinal. I have an infection in my stomach, and on antibiotics, trying to get rid of it. Anyway, I'm glad to be with y'all. I missed you. And I don't mean to hurt your feelings, but I didn't like the hospital more than I missed you. All right, so don't forget you must have your webcams on, and you also must have a shirt on. I know that seems like a strange request to ask, but I know it's an online class. Good morning. Missed y'all. So I'm just admitting students, and so we've got 5 minutes left till class starts. Those of you that are in class now, if you go into Blackboard, into course content, so go into Blackboard course content, and you will see in the Chapter 2 folder that I have uploaded a template for Chapter 2. And we're going to work that problem probably about 30 minutes into class. Okay, so I just wanted you to be aware. Again, I will announce it when everybody's in the room. And again, you must have your webcam on, and it's a shame that I have to say this, but you need to have a shirt on. You don't need to be laying in bed or lying in bed. Is it laying or lying? Lying in bed, I guess. Tim, how's Germany?
Germany's fine.
How's
We don't have that many cases, so it's good.
Oh, you don't? Oh, good. And throughout the country, or just where you're living?
In my town and in the whole country.
Oh, good. Well, you know us. The United States, we seem to like hanging around. Although I know the cases are going down. Of course, this is anecdotal in one hospital, but I was in the major hospital here in Tampa General, and they're seeing a reduction in cases, but a reduction from very high, is. So everybody, again, you must have your webcam on. You must be out of bed, and you must have a shirt on, please. Now, pants, that goes without question, right? In case we accidentally stand up. So glad to be back with y'all. All these faces, oh my gosh, it's just brightening my day. Good morning, everyone. For those of you that are just joining us, go into, there is a file that I have uploaded in the Chapter 2 folder in course content, and it's an Excel template. So we're going to work that problem 2.8a, later on, not the first thing in class, but later on. Number one, for accounting reasons. Number two is, remember we've got Excel, and we need to know how to work Excel. So I'm going to show you some Excel techniques as we're working the problem. I hope that y'all have taken my advice and been looking at some YouTubes on Excel, getting used to that Excel technique, and learning basic Excel skills. As I told you on the first day, God, that seems so long ago, but as I told you on the first day, sorry, I just got out the shower. My hair is not completely dry, but that you have to know Excel. If you don't know Excel midway through your academic career, then you are going to be in trouble. Okay, so I think everybody's in now. They're still coming in. I'll be back in 2 seconds. And wait, here's another one. All right, so go ahead, get your webcams on. Webcams must be on. You must be out of bed. I mean, you can be sitting in your bed. Don't be lying in bed. And please have a shirt on. All right. All right, so let me go ahead and admit these students. Tim, how long ago was World War II? And I'm not going to pick on you the whole class since you're the only one.
75 years.
Right, 75
Like
years
the end.
ago. And as a German citizen, do people in the United States like to bring it up to you?
Yeah, all the time.
I know, and I don't get it. It's 75 years ago, right?
I'm also not asking about the indigenes or something like that, about the Indian people.
Oh, yeah, you ask us about that.
No, I'm not asking you about that because it will be the same question, Jim.
Oh, exactly. Okay, I see what you're saying. Exactly. It would be like, and it's like, yeah, we didn't treat them very well, but that was long before my time. And I find it interesting because I've heard that before. Whenever people are around somebody from Germany, it's like it was 75 years ago. I'm sure Germany's not real proud of what happened, and
Definitely not.
are we proud of some of our history that we're having to, that we're dealing with right now? So I find that's interesting. Okay, it looks like most of you are in here. One of the things is that I want to do straight off the bat is I just want to see where you are on understanding debits and credits, okay? So there are 27 students in this room, and I ask all 27 of you to answer. I'm going to push out some polling questions, and they're just simply about how do I increase this account? Do I debit it or do I credit it? I want to get a sense of your understanding of it, since I was in the hospital for too long. So let me go ahead and send these out, and everybody must answer, okay? How's everybody doing? Some
Good.
response would be great. Unmute yourselves, just like in the classroom. I really, really enjoy what I do, and I hope that through this computer screen that comes across. So I'm going to go ahead and launch some polling questions. And there are several questions that you have to, there are, I think, 8 of them. Yes, there are 8 of them. So go ahead and answer. In order to increase each one of these accounts, should I debit or credit? So I can, again, this is not graded, but you must answer, and it's to give me a sense of your understanding of debits and credits. There you go. Can I see you? There we go. I miss you. There we go. Thank you. So again, if everybody can go ahead and debit and credit. And again, this isn't a guessing game just because it's not graded. I need for you to please take it seriously so that I can see where you are in your understanding. Okay, so I have 10 of you that need to complete it. You may be in the middle of it. Not that people need to brag about how sick they were, but since the last time that I have seen y'all, and I have not been on a diet, I have lost 9 pounds. I don't recommend it as a diet. I really don't. So, okay, 6 more of you. If you can go ahead and finish it, please. And then I'll go ahead and end the poll so that we can start talking about accounting.
Professor,
Yes.
I was wondering, should we use these worksheets to study for the exam? Would this be a good resource to use?
Oh, anything that we use in class, like the worksheet. Was that Alyssa asking the question?
Yes, that was me.
Thank you. Alyssa, like the worksheet that we're going to work today, I will put the solution to the worksheet up on Blackboard not right after class, because I teach another class at 10 o'clock, but after class, I will put the solution up for you, absolutely, for you to use and study. Again, we're working on EOC problem, end of chapter. Anytime you hear me say EOC, it means end of chapter. So working an end of chapter problem is that problem 2.8. You will see, Alyssa, often during the semester that I will make up my own problems so that you still have the end of chapter problems used to study. So great question. Okay, I'm going to go ahead and end the poll. I have one person that hasn't completed it. There we go. So let's go ahead and end the poll. And can y'all see do y'all see the answers that y'all gave? Does it automatically show?
No, ma'am.
Oh, no, never mind. I got to click this bright blue button that says share results. And okay, so supplies. And y'all can go ahead and unmute yourself. If you're eating breakfast and it's not real loud, go ahead and unmute. And I don't care if you're eating breakfast. I just want you webcam on, not lying in bed. I know some of you may be in your dorm sitting in bed, and please have a shirt on. Okay, so what kind of an account is supplies?
Asset.
Good, it's an asset. Okay, it's an asset. Now, what are assets? Tell me, what are assets? We got this accounting equation, and what is the accounting equation? Reese, you with me? Reese, can you unmute? I got a question for you. And I'll just call on you just like I would in class. And there's nothing. So Reese, what is this accounting equation? Can you tell me what the accounting equation is?
No.
Okay, can someone help him out? These are your teammates, right? And we help each other out. There's no reason, if we don't know the answer, we would rely on our team to support us, right? Now on the exam, you're going to be individual, but until we learn, we're a team. So someone help him out. What is the accounting equation?
It's assets equal liabilities plus stockholders' equity.
Okay, great. So it's assets equal liabilities plus stockholders' equity, right? And I did buy a document writer so that I could write on the board and y'all wouldn't, write on my document writer and have the whiteboard on screen. But I have a Mac and I cannot get that thing to talk to a Mac, and it says that it's Mac and Windows. But we've got assets equal liabilities plus stockholders' equity. Okay, can everyone see if I move my behind out the way? Can everyone see the board?
Yes.
Okay, so we have assets, right? And these assets are the resources that a company has in order to generate revenue. For example, a store that we like to go, we all need to shop, whether we like it or not, we need to shop. So,
Excuse me, real
sure,
quick, what was that definition of assets you gave?
I haven't given it yet, I'm working on it.
I'm sorry.
That's not a problem. So asset, oh, I did give it already. Sorry about that. Assets are the resources. Sorry about that. Assets are the resources that a company has to generate revenue. So when we walk into a store, we may not think of those display counters that we have as anything. They can't sell the display counters, but they hold the merchandise or the inventory that they're going to sell. Well, that display case is a needed resource. They need the display case in order to show the watches. If you're in for shopping for watches, that would show the watches that you have a choice of to buy. So the display case itself is a resource, which is an asset that the company has because it needs it in order to generate revenue. So that would be property, plant, and equipment. Okay. A long-term asset. That display case we expect to be around for a long time. It's going to be used for a long time in the generation of revenue when we're talking about a brick and mortar store. And that asset will be around for a long time, and we call it property, plant, and equipment. Please get used to acronyms in accounting because we use them constantly. And it's not just me being lazy with my speech. It is that we just use them. So property, plant, and equipment, PP&E, is an example of a long-term asset, a long-term resource. Now, in that display case are the watches that are for sale. And the watches that are for sale is called inventory. And we'll learn more about inventory in a later chapter. But inventory is an asset. It is the asset that we're actually selling, the watches. Okay? So again, assets are resources. Now, the other side of the equation, liabilities plus stockholders' equity, we've got this equal sign. And since the assets are, and I'm going to move out the way so y'all can see. See, I can't wait to be using this document writer. Resources and claims to the resources. So the company has assets, and we'll go through those. For example, supplies, the first one in our polling question. So the second, the right side of the equation says, how did we get those resources? I have assets. I have resources. How did I get those resources? And I either got the resources from creditors. That's creditors, sorry. And meaning that we borrowed the money.
What does it say
Liabilities.
above liability?
Liabilities, this says creditors. So liabilities mean that we borrowed the money from creditors. We owe. So I could have gotten those display cases by paying cash for them, or I could have gone and borrowed the money, meaning I'll pay you later, which is a liability. So we can borrow money, which we owe, which is a liability, in order to acquire assets, or we can get them from the owners. And we're going to look later on, you don't have to write this in your notes just yet, it's coming, but we've got from owners, and we're going to see that there are two types of stockholders' equity. There are two types of stockholders' equity, and we will talk about those two types momentarily. Okay? So the accounting equation is assets equal liabilities plus stockholders' equity. It has to balance. It's a mathematical sentence with an equal sign. And this accounting equation says the company has assets, those resources that it uses to generate revenue. And the right side of the equation tells us, how did I get those resources? Did I get those resources from creditors, meaning I owe, and therefore they're liabilities? Or did I get it from the owners of the corporation? And again, we're going to see that there are two types of stockholders' equity. So Reese, what's the accounting equation?
Assets equals liability plus supply.
Plus stockholders' equity.
Oh yeah.
Okay, you were looking up there at supplies. Good. Okay, good. So now, after we've talked about that, supplies. What kind of an account are supplies? Assets, liabilities, or stockholders' equity?
Assets.
Good. It's an asset. And how do we increase assets?
With the
The
debit.
debit.
Good. So assets we increase with a debit. So how would we increase any liabilities or owner's equity in order to make that accounting equation balance? If one side goes up,
Credit.
very good, then your liabilities and your stockholders' equity are going to be credits. Let me put the brakes on this thing. Okay. All right, so that's where we get, if you can think of that basic accounting equation, assets equal liabilities plus stockholders' equity, to increase on the left side debit, to increase on the right side credit. All right, so now for those of you that answered credit, do you see where debit is the correct answer now? Because supplies is an asset. Supplies are the things that we've got in the supply room that our employees can use for generating revenue. You know, the paper and the toner and the paper clips and the pens and all the supplies that they need to generate revenue.
Professor,
Yes.
I don't know if I have the right train of thought, but sometimes I think of debit as something that comes out of like the owner's pocket, whereas, you know, credit is something that comes out of someone else's pocket. Like when I try to differentiate between like
Okay.
the list that you gave, I don't know if that's right.
No, it is not. Alyssa, get that totally out of your mind. All I want you to think of is all debit means is on the left. It doesn't mean increase, decrease, you know, because sometimes we decrease something with a debit, and sometimes we increase things with a debit. So get that totally out of your mind. Debit means on the left, and it means on the left side of the T account. And credits are on the right, which means that when we post the journal entry, we post it on the right side of the T account. And of course, we know the T account is the general ledger. Okay, does that help you? Does that help you
Yes.
That's why you were getting confused, is because you were trying to associate, like some
Yeah.
people want to think a debit is good and a credit is bad. Well, that's not the case. So debit means on the left, credit means on the right, and that's it.
Thank you.
You're quite welcome. All right, so now we got into advertising expense, and you're like, Dr. Bostic, I don't see expense anywhere in the accounting equation. So everybody go to page, I believe it's 74. Nope, 72. And I actually, you can look at page 72 or you can look at page 65. I find page 65 to be less clutter. It doesn't matter to me that both the illustrations say the same thing. So either the illustration on page 65 or the illustration on page 72, they're the same thing. One has just, in my opinion, less clutter than the other one. Okay? So there we see either on 65 or 72. I personally am on 65. I don't like clutter. Now you can't tell by this hobby room. I'm in my husband's hobby room, as I've told y'all, and it's a room it's hands off. I don't clean in here. He knows I'm taking it over for the semester, and I can't fuss about how messy it is. This is his room. So you see the accounting equation, and look underneath the accounting equation. Expenses, because now we're talking about advertising expense here. Expenses affect what account or what broad category of accounts?
Stockholder equity.
Nice job. Stockholders' equity. Because when we have expenses reduce net income, and net income increases stockholders' equity. So if expenses are going to reduce our net income and net income increases stockholders' equity, particularly retained earnings, okay, then expenses are a debit. And the reason that expenses are a debit is because they're decreasing retained earnings, one of the two types of stockholders' equity. If you don't understand that, please speak now or forever hold your peace.
I don't fully understand it.
Okay. Let's see, that was Stone?
Yes, ma'am.
Okay. So let me, Stone, one of the two types, so I'm gonna go ahead and talk about this right now. One of the two types of stockholders' equity. So I know I've got assets equal, can y'all see the purple as well as the black? Probably not. And I was in front of it anyway. So assets equal, and I'm gonna move so that you can see, plus stockholders' equity. Looking at page 65 or 72, whichever one you're looking at, do you see that underneath stockholders' equity, we have common stock and retained earnings, okay? So underneath stockholders' equity, remember I told you there were two types of stockholders' equity. One is common stock. And please write this down in your notes. It is also called paid in capital. Okay, so this is also called paid in capital, PIC. Thank you, Bill. Paid in capital. Do y'all want to meet my husband real quick? There's my husband. They can't see you too well. I call him Nancy. He's a sleepy faced. Yeah, that's.
Y'all got too early at class.
They'll probably agree with you.
Nah, too early for this class.
All right, long-haired hippie man. All right. So, yeah, my husband's a retired chemist. So, stockholders' equity, one type is common stock, which is paid in capital. Notice in parentheses, I put PIC. Of course, it's accounting. We've got acronyms. We call it PIC, PIC. Now, that is contributions from the owners. Contributions from the owners. You are interested in investing directly into a company. And so you give the company cash as your investment. You buy a share of stock from the company or 100 shares of stock from the company, and you give them cash, and they in turn give you an ownership position in the company. Paid in capital. That means that the owners paid in capital. Capital is be careful about defining that word, but capital is the necessary funding that a company needs in order to acquire its assets. Okay, so one of the ways that they can get those assets is through owners, and there are two ways that they get it from the owners. How are y'all doing? So here we've got the owners, the stockholders' equity in the accounting equation. And one of the ways is from contribution from those owners that paid in capital. And in a corporation, we call it common stock. They bought stock, okay? The other way that owners contribute assets to the company is through retained earnings. So those are your two types of stockholders' equity: paid in capital, common stock, and retained earnings. Now, look, I'm looking on page 65. Look underneath, Stone, look underneath retained earnings. And what causes retained earnings to change? Do you see them in the orange box on page 65? What causes retained earnings to change? And think about the name of it, retained earnings. It's the earnings that the company has retained within the company. So Stone, what causes retained earnings to change?
I'm not gonna lie to you, I can't find it. I'm sorry.
Okay, it's on page 65. Do you see the orange boxes beneath the purple?
No, ma'am, I don't.
Huh, is it on page 65? Are others not seeing it on page 65?
Mine's on 72 and it's the exact same diagram.
Okay, so 72 and 65 are the same diagram. So do you see it on 72? Are you in an accounting textbook?
Yes, ma'am.
I'm
hope so.
That was an early morning. I was just an early morning. Y'all will figure out my personality pretty soon. I'm kind of a dry wit person. All right, so help him out. What causes retained earnings to change? Do you see it now, Stone?
Yes, I do, but can I have a team member help me out on this one?
There you go, Stone. That's how you leverage it. Good job.
It's revenue minus expenses minus dividends.
Good, good. So retained earnings, just think about that name, that it is the earnings that the company retains within the business. So they generate revenue, which increases net income. They have expenses. We incur expenses in order to generate that revenue. We have to pay Our salaries, we have to pay utilities and rent and insurance. Those are all expenses. So you have your revenue that you're generating by selling services or selling your products. You're generating that revenue. Then you subtract from that revenue your expenses. And what does revenue minus expenses equal?
Net income.
Good, net income. Net income. So we know that net income increases retained earnings, and retained earnings is a type of stockholders' equity. We know that expenses decrease net income, so they're decreasing retained earnings, which is a type of stockholders' equity. So we've got revenue, generating revenue, paying out expenses that we have to incur in order to generate this revenue, and the net result is net income. Well, this company has generated this net income, and they can do one of two things. They can keep the earnings, the net income, within the company in order to buy additional assets, or they can distribute the earnings to the owners. Now, they don't have to distribute 100% of it, some of it, because they need to retain some in the company. So if the company chooses to distribute some of the net income to the owners, what do we call that?
Dividends.
Dividends. Good, Ryan. Dividends. All right. So write this down in your notes, and I'll go slowly. And I promise, I worked until midnight last night trying to get that document writer in. It came in when I was in the hospital. And right. So write this in your notes for me and put beginning retained earnings. So beginning retained earnings. I'm just going to write this down and then I will go over it because I know you don't like, well, y'all do in class, see our documents. All right, so we've got beginning retained earnings. So we've got beginning retained earnings, what we started the year off with. And we know that net income, that's NI is net income. We know that net income, that's a plus sign, increases retained earnings. And dividends decrease retained earnings. So beginning retained earnings plus net income minus dividends equals ending retained earnings. And we're going to see the importance of this understanding what causes change in retained earnings. So,
Ma'am,
yes.
I've got one question.
Sure.
Why do the company distribute the dividends to the owners and not to the employees?
Oh, the employees don't own the company. So dividend.
I know, but wouldn't it be more fair to give the money to the employees because they generated the net income?
Employees would get a share of the net income through their salary. Companies can like give bonuses, and bonuses would, like to an employee, like say your salary is $100,000 a year, and the company did really well, and the company can choose. They don't have to, but a company can choose to, because they generated more net income than expected, or for whatever reason, they can choose to distribute that to the employees through a bonus through their salaries. Okay. I understand the concept like that you have, like you're familiar with Walmart, a big company here in the
Yeah, I
United
am.
States? All right, the Walton, is it Sam Walton? The Walton family owns Walmart. I mean, it's now on the capital market, but they started Walmart. Well, any earnings would be distributed to them because they took the risk of owning and starting the company itself. They owned the company and they owned the net income. Now, companies, and again, when we get into management, when you get into management classes, like how do you retain good employees? Well, good employees are going to want a share of the profits, but it's not going to be through dividends. It's going to be through their salary. Does that help you a little bit, Tim?
Yeah.
Okay.
Yeah, that's a good
It's
answer.
the way
Thanks.
it works. It's just this, it's the capital market. The employees don't own the entities itself. The owners actually own the net income, and they can choose to distribute it to their employees if they want. Okay, that's the reason that salary negotiation, when you get out there and you start negotiating salary, it works the same way. You know, make sure that you're negotiating a good salary. All right. So again, let's make sure that we understand this very important concept that, and I'll go to page 72 since that you see the two types of stockholders' equity, 65 and 72 are the same. You see the two types of stockholders' equity. One is the paid-in capital, that common stock. Owners contribute cash to the company and they get an ownership position. They own part of the company. Or they can retain their earnings within the company. Instead of distributing all of the earnings through dividends, they retain some of the earnings within the company so the company can grow. If a company, now again, in all three of my degrees, my minor was finance. And so I don't want to turn this into a finance class, but companies, in order to be able to grow, they need to retain some of their earnings within the business itself in order to grow, in order to acquire more assets, to generate more revenue. Okay? Stone, do you understand a little bit better now about the stockholders' equity? So we have two types of stockholders' equity, a concept that when we get into chapter 3, we're going to be seeing again and again and again. Beginning retained earnings, which is one type of stockholders' equity, plus net income minus dividends equals ending retained earnings. Now, how do we determine net income? What's the formula for net income?
Revenue minus expenses.
Good. Revenue minus expenses. Okay. So let's go back to our polling question, what started this. Advertising expense. What effect did expense have on retained earnings? What effect does expense have on retained earnings?
Negative.
Okay, it reduces it. Expenses reduce retained earnings because they make our net income lower. How do we reduce anything on the right side of the equation, debit or credit?
Debit.
Debit. Debit. Okay, so I'm going to listen to me carefully, and then I'm going to give you a chance to write it down because it's so important. In order to increase expenses, we debit because it's decreasing retained earnings. Okay, so think about that. We debit expenses to increase them because it has the effect of reducing retained earnings, And retained earnings is one of the types of stockholders' equity. Okay. Rachel, how you doing?
Good.
Okay. All right. So we will work
Can
with
you,
this.
Professor, can you repeat that? Yeah.
Sure. Alyssa and Maya, where are y'all? So in order to increase expenses, we debit. And the reason that we debit expenses to increase them is because they have the effect of decreasing retained earnings. And retained earnings is a type of stockholders' equity. I missed you, Alyssa. I had tears in my eyes when you were
Sorry,
gone.
I was in the restroom.
I figured that. We're all going to get comfortable in here with each other. Okay. Do I need to repeat it again? I'll be happy to, because it's a very important concept.
Yeah, that would be great. Thank you.
Alyssa, you went to the bathroom. You just need to rewatch the recording. No. All right. To increase expenses, I'm going to go pretty fast because to increase expenses, we debit. And the reason that they're a debit is because they're decreasing retained earnings. And retained earnings is a type of stockholders' equity. And to decrease anything on the right side of the equation, we debit. So what is the correct answer to number 2? Did most of you get it right or wrong? So how do we increase advertising expense?
Debit.
Debit. Debit. All right, so supplies expense is the same thing. We debit. So we debit expenses. Now, the reason that I have supplies expense up here is we said that supplies was what type of an account?
Asset.
Asset, good. So supplies are those assets that are sitting in a closet just waiting to be used in revenue. The paper, the toner, the pens, all the supplies that we need in order to work. Now, when an employee goes to that closet and gets out a ream of paper, it has now become an expense. That asset has now become an expense because it's being used in the production of revenue. So supplies expense represents the supplies, the asset supplies that has been used. So supplies is the asset. And then when we use the supplies, they become supplies expense. And we'll learn the adjusting journal entries on how that happens in chapter 3. Chapter 3 is a booger bear. Okay. So do you understand the difference between supplies and supplies expense? Yay or nay? Give me some thumbs up or thumbs down. Y'all got those reactions. Yeah, you can do like this or you've got the reaction. Okay. Because I don't want to move on unless you understand chapter 2 and chapter 3 are critical to the rest of the semester. All right, accounts payable. What kind of an account is accounts payable?
Liabilities.
Very good, a liability. And Tim, what does that mean? We have a liability. What does that mean? What is a liability in your own words?
Something that we haven't earned yet. Something that we owe someone else.
There we
Creditor or
go.
investor.
There we go. It's something that it's that we owe. So I went into Office Depot. I bought supplies on account. On account means I'll pay you later. So I went into Office Depot, and I'm a corporation, and so I have an account with them, and I say, oh, just put it on my account, meaning that I will pay you later. When I pay you later, that's a liability. We owe it, as Tim said. So how do we increase liabilities? It's on the right side of the equation. How do we increase very good. So anything on the right side of the equation to increase, we credit. So to increase liabilities, and when y'all hear me snapping my fingers, that means I want a debit or credit answer. And y'all are going to get where I don't even get a snap out. Okay. So how do we increase liabilities?
Credit.
Debit.
Credit.
Credit. Sorry.
Credit.
It's a credit. It's on the right side of the equation. Now, how do I know that this is a liability? You see that word payable? That means that I have the obligation to pay in the future. That's an easy way to remember it. What is accounts receivable? Do I have it on here?
An asset.
Good. Accounts receivable is an asset. And to increase assets, we
Debit.
debit. So do you see this one says receivable? It's an asset because you have the right to receive money in the future. Customers said, put it on my account, I'll pay you later. So accounts receivable represents the money that our customers owe us, our right to receive money in the future. So receivable, asset, because I'm going to receive money. Accounts payable is a liability because I have the obligation to pay. So that's how you differentiate between accounts receivable and accounts payable. Accounts receivable, an asset. Accounts payable, a liability. Now, number 5 is deferred revenue. It is also called unearned revenue. This textbook uses deferred revenue. You will also see it called unearned revenue. What kind of an account is unearned revenue?
Asset.
Good, Junior. Was that Junior?
Yeah.
Good job. No, bad job. Sorry. Bad job for me.
Credit. It's
Good.
a credit. Right?
A liability.
Junior, I was just seeing if you were paying attention. That was all to what I said. Right. Unearned revenue is what kind of an account?
Liability.
Good, a liability. So before we talk about, or before I ask you what is this account? We know it's a liability. How do we increase liabilities?
Credit.
Credit. Okay. Now, deferred or unearned revenue. I used to have flights booked. I don't have any flights booked right now, which is very unusual. I usually have a flight booked, but COVID has kind of, I haven't used my travel budget, which is good, so that money's still sitting in a savings account. But deferred revenue, suppose that I had purchased a flight to Amsterdam. That was one of the places my husband and I were going this summer. Amsterdam to Istanbul, Istanbul to Romania, Romania to Hungary, Hungary to Prague, Prague to Vienna. Sorry, I was skipping Germany. So we canceled our trip. But suppose that I have purchased a flight. So I went into southwest.com and I purchased a flight. And I'm going to use this flight at Thanksgiving. Now, have I paid for it? Have I given Southwest my credit card information and paid for it? Can I book a flight without paying for it?
No.
No. So does Southwest, so I'm Southwest right now, okay? So some customer, Lisa Bostic, gave me as Southwest money because she purchased a flight to go see her son in Chicago. Okay. So Southwest has my money. They're going to debit cash because cash went up. Now, has Southwest earned this revenue? Have
No.
they
Not yet.
tried? No, not yet, right? Because I haven't flown yet. So they have my money, but they're going to perform the service later on. I'm going to walk down, and get on the plane and later on in November to go see my son in Chicago, which isn't going to happen, but to go see my son. So Southwest owes me a service. Southwest owes me a service. Southwest, I'm sorry, I keep referring to me. Southwest has my cash. They debited cash. But they got the cash for a service that they're going to perform later. They haven't earned the revenue yet. They still owe me for that revenue. So since they still owe me for this revenue, it's a liability. So deferred revenue or unearned revenue is a liability. Write that in your notes and highlight it, because so many students, because it has the word revenue in it, so many students think that this is revenue because it has that word revenue in it. It is not. It is unearned or deferred revenue, meaning it's a liability. I'm going to pay for it later. If
On
I,
the oh, sorry, Professor.
that's okay. And remember, when we say pay for it later, it can be I pay in cash, or I pay in services, or I pay a product. Okay, depending upon what type of liability it is. If I borrowed the money, I'm going to pay cash. If it is like Southwest, I owe a service. Okay, Alyssa, you had a question?
Yes, ma'am. On the exam, are you going to use those two terms interchangeably from like deferred and unearned? Like,
Yes, I would count on that.
okay.
I do try and put it like I have it here, deferred, and then parentheses unearned, but those two terms are used interchangeably. So
Okay.
if you see deferred revenue, you know what it is. If you see unearned revenue, you know what it is. Okay. Some textbooks use deferred, some textbooks use unearned. And I will try and parenthetically, like I have it here, put it here, like I have it here. All right. So deferred revenue is a liability. It has revenue in the name, but it is a liability. You owe a service or you owe a product if somebody has prepaid for it. So again, how do we increase deferred revenue, debit or credit?
Credit.
Good. I want to hear the whole class. Credit, because it's a liability, and to increase liabilities, we credit. Now, revenue.
Asset.
Right.
Okay, revenue. It's not an asset. What does revenue affect?
Net income.
Good. Revenue affects net income. Remember, revenue minus expenses equals net income. And net income causes which account to change?
Stockholders' equity.
Stockholders' equity.
Okay, stockholders' equity, and which one of the two?
Retained earnings.
Credit.
Very good. I'm going to keep drilling y'all down on that, right? So revenue increases stockholders' equity. In particular, it increases retained earnings. And the reason that it affects retained earnings is because it increases net income. Revenues minus expenses equals net income. So since revenues increase retained earnings, and retained earnings is a type of stockholders' equity, how do we increase revenue?
Credit.
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 Credit. Good. Credit, credit. Just like expenses, how do we increase expenses?
Debit.
Debit. So here I've got revenue as a credit minus expenses, which are a debit, equals net income. Now, dividends, just in your own words, Annie, what are dividends in your own words?
Isn't it like what you pay back the common stock? Or like the owners?
Okay, there you go. Don't use common stock, use owners. So it's not I'm paying them back because they didn't loan me any money. They're owners. They gave money to the company and they're not owed that money back. But dividends are a distribution of what?
Money to shareholders.
Right. So I'm distributing what to the shareholders?
Earnings.
Stock.
What am I distributing?
Net income.
Net income. I'm distributing net income. Remember, we had retained earnings. Net income made it go up. If I distribute some of that net income, then I have retained less income in the company. Does that make sense? Okay. When we prepare a financial statement that we're going to be doing in chapter 3, this will all come together. Right now, this is like she's speaking a foreign language, and I understand that because accounting is a language, but the language of business, and you're just learning the nouns and the verbs. Okay. So dividends are a distribution of net income to the owners. It reduces retained earnings. And to reduce retained earnings, which is a type of stockholders' equity, do we debit or credit? How do we reduce something on the right side of the equation? How do we reduce stockholders' equity? Debit. Therefore, the more dividends I have, the less retained earnings that I have. Therefore, to increase dividends, you debit. It has the same effect on retained earnings that expenses do. Expenses reduce retained earnings, they're a debit. Dividends reduce retained earnings, they're a debit. And then we've already discussed accounts receivable. Accounts receivable is what kind of an account?
Asset.
Asset. I already hear everybody saying it. If you just stay unmuted, that way you can just talk. So accounts receivable is an asset. It is the money that our customers owe us, and to increase them, we debit. I think that was a great exercise. Do y'all like sending out the polling questions like this to assess your understanding? It doesn't have anybody's name on it, so and it's not graded, but it tests your understanding. I will do this all semester long, send out these, they call them polling questions, okay? So I need you on your A game with that engaged reading.
I have a question.
Sure.
So why is dividends, you said it was debit dividends,
Yes, so we debit dividends.
but can you explain why?
Okay. Dividends are a distribution of net income to the owners. So I've earned this net income that the company has. So the company is holding on to this net income. And depending on what their long-term goals are, they can retain that net income within the company, or they can distribute a portion of it to the owners. If they distribute a portion of it to the owners, which is called a dividend, they pay a dividend to the owners. What happened to my retained earnings, Junior?
It decreased.
It decreases. Excellent. How do I decrease anything on the right side of the equation?
You debit it.
Beautiful.
All right. Thank you.
Got it?
Mm-hmm.
Oh, you're quite welcome. All right, so I know that Professor Green had some journal entries that y'all went through, and you did some journal entries. Is that correct? I know I looked at the recording of the class. Did y'all notice I put it up, the recording of the class? Okay.
Yes.
And I will be putting the recordings of the classes up. And again, I apologize. Of course I didn't ask to get sick, but even when I got out of the hospital, I was sick. Yeah. So,
Excuse me, do you mind if I ask what actually happened? What-
sure. I at 2:30 in the morning Tuesday night, I was in the bathroom and with both ends happening. I don't mean to be gross, but since you asked, and I had the same thing in July, and it hit me really hard, very nauseated. Like even after I threw up, I was still nauseated. And the same thing happened to me in July, and I was in the hospital 6 days. So here it's happened to me again at the end of August, but this time they diagnosed it. I mean, I was nauseated for 3 days and threw up for 3 days, and it was pretty awful. They have diagnosed it now with colitis. They believe that it is colitis. I've got to go see a GI doctor, and of course, with it being Labor Day here in the US, I couldn't get an appointment yesterday. So that's what was happening. I lost 9 pounds. I lost 9 pounds since the last time y'all seen me. So that's what happened. And it wasn't from partying all night, I promise. it was like I said, I have an infection in my stomach, and I took my last antibiotic last night. So I'm an open book as long as y'all can handle it. All right, so we've learned debits and credits. We've learned the accounting equation. And I assume, and again, this is where we shouldn't assume, but I assume that you understand that when a transaction, when an economic event happens in a company, that we have to do a journal entry in order to record that transaction. So everybody go into Blackboard. Go into course content, and let me just say this up front. You're going to have to upload your Excel file so that I can look at it. It's not graded, but I'm going to look at everybody's uploaded Excel file, and I'm going to give you some feedback on how you can improve your Excel skills. Okay, so don't pretend you're doing it. You need to really do it. So go into course content, go into chapter 2 folder, and do you see the template that says classwork for today? Let me make sure that I'm in the right class. And I'm going into course content, chapter 2, and down at the bottom, you have got the Excel template. Now I'm going to go ahead and pull this Excel template up. Go ahead.
Where do you see this?
All right, let me share my screen. And I'm going to go into Blackboard. And do you see course content? Click on course content. And do you see this chapter 2 folder? If you scroll down, do you see this template right here? It's an Excel file. Go ahead and download that template, and we're going to be using that template to work problem 2.8a so that we're applying what we learned And problem 28A is on page 102. Am I still here?
Hey, Professor.
Yes.
When I click on course content and then chapter 2, my page doesn't show up like that, and it won't let me click on any of the links within that chapter 2 page.
Okay. I'm going to stop sharing mine. Who was asking me that question? Who just said the problem?
Nathan.
Who is it?
Nathan.
Nathan. I see you. Okay, Nathan. Nathan, can you share your screen?
Yes.
Okay, go ahead and share your screen with me, please. And did anybody else have problems with that?
Yeah, I do too.
Okay, so that's why Kate, Case will share the screen. So Nathan, if you can share the screen, raise your hand if you have the Excel template up. Okay, so share the screen and
So that's what it looks like for me. I don't know if you're seeing it now.
yeah, okay. Right over here, you need to pull out, you see where the blue line is on the left side?
The blue line.
You see that there's a okay, yeah, you see that arrow that just popped up?
Yeah.
Okay, now go into course content. Go into chapter 2.
And it just shows up like that.
Well, aren't you special?
He has it. It's just he has to click on the link inside the folder.
Yeah, I try to click on the links here, but it
Okay,
doesn't.
do you see this problem 28A in the margin where it says table of contents?
Yes.
All right, do you see the template problem 28A? Go ahead and click on that template.
Yeah, nothing happens when I do that.
Yeah, mine too.
Mine too.
Okay.
I tried it on Chrome. I wasn't sure if that was it, but
yeah, no, I'm on Safari, and you tried Chrome is, well, isn't that interesting? Okay, just give me a second, please. And can you stop sharing your screen, Nathan?
Yes.
Thank you. All right, this won't take me 2 seconds if, well, maybe more than 2 seconds to fix, but okay. Go into that chapter again, that chapter 2. And do you see that I just added something that's called template?
Yes.
Okay, see if you can open it there.
Still won't let me. I don't know if that's what everyone else is.
All right, it goes into, do you see your download file?
Yes.
Okay, is it in your downloads?
No.
Me neither.
Like, I don't know. It's just not provided to click.
Do what?
It's not letting you click the link.
It's not letting you click the link. I'll be honest with y'all. I've never had this problem. Okay, this is recorded. So go ahead and get. Okay, let me use the reaction button. Do you see the reactions down at the bottom?
Yes.
In your menu? Okay, give me either a thumbs up or a thumbs down if you have the Excel spreadsheet.
I don't have a thumbs down, so.
Oh, I tell you what, oh, you don't have a thumbs, or what? Well, it's a,
I mean, I don't see it on my reactions.
Oh, all you have is a thumbs up? Then that may be all that's available. Okay, what I'm going to do is, sorry, this has taken so, I've not had this before, and that obviously it has happened now. What I'm going to do is go into, shoot, I really want y'all doing this, obviously.
Show full screen and then the link was working.
Yeah, now I can't get my, okay. Come on, scoot this down. All right, all right, those of you that don't have the Excel file, just write down notes of, just write down what we're doing. I will put the solution, I will upload the solution onto Blackboard. So just take notes, those of you that don't have it, haven't been able to pull up the Excel file. Okay, sorry about that. I don't know why some can, some can't. I'm really puzzling. All right, so I'm going to share my screen. And this is what the template looks like. This is a, go ahead, Stone.
Because I did it on my Mac, it just opened up this thing called Numbers instead of Excel.
Okay, you need to download the Microsoft Suite that the university provides to students for free. I have a Mac, but although it's a Microsoft Suite, you know, Word, Excel are the two that will be in PowerPoint. Excuse me, Word, Excel, and PowerPoint. You need to download, you need that Microsoft Suite, okay? And it's free for the students, and maybe other students can tell you how to get it. But numbers, we don't work in numbers, we work in Excel. Okay, so between now and the next class, make sure that you find out how to do that, even if you have to contact the IT department or other students, or you can email another student in the class and they can help you with downloading it. Okay. All right, so we've got the Excel spreadsheet. Now, we call a file a workbook. We call a file a workbook. Notice down at the bottom, can everybody see my screen? Okay, notice at the bottom that I've got a worksheet within the workbook that's called JE's, journal entries. And then I created another worksheet within the workbook that is the general ledger. These are your T accounts. And then the third worksheet is the trial balance. And we're going to prepare a trial balance. So we're going to do journal entries. And we're going to post the journal entries to the general ledger. And then we're going to prepare a trial balance. Professor Green went over the steps with you. And the steps of getting a transaction into the accounting records are on, well, we do the journal entry. Does anybody see the page? I'm missing it. I'm not missing the page. I just keep skipping over it. We do the journal entries. Then what do we do after we do the journal entries? What's the next step? What did she have you do?
Post them.
Good. You post to the general ledger. And then when it is time to prepare financial statements, you have to calculate the balance of each one of the accounts in the general ledger and put it on the trial balance. Do y'all remember that from last week? From Thursday? Okay. Now I'm going to go into the journal entries worksheet. So make sure that you're in the journal entries worksheet. And again, the problem that we're working, problem 28A, is on page 102. So let's record the first journal entry. It says that, so step 1 required, says record each transaction. So September 1st, so I just put in September 1st. If you want to see what is in the cell, what I actually typed in, just look at your f of x function here. Does everybody see? So this is where I type 9/1/20. I just put in 2020. I have it in date format. And we provided services to customers for cash. So what am I going to do? And let's do this in proper journal entry format. Proper journal entry format is debits are on top, credits are on the bottom, and indented. So what account am I going to debit? So let's analyze this transaction. We perform services to customers for cash. And this is Pirates Incorporated. And I don't know what Pirates Incorporated does, but hopefully not pirating. They sold some services on account. So say it's a CPA firm and they did a customer's tax return and the customer paid them. What did they get?
Cash.
Cash. Cash is what kind of an account?
Asset.
And did it go up or did it go down?
Up.
Up. And if cash went up, am I going to debit it or credit it?
Debit.
Good. So we're going to debit cash. And for how much?
4,700.
4,700. Good. Now I'm going to credit. Now remember, on credits, we indent. Right here, I've got an increase in dent. So I click on the increase in dent, and I'm going to credit service revenue. Notice it's not left justified because we indent credits. And I'm going to credit
Professor,
$4,700.
how do you do the indent?
You're going to need to work with your toolbar in Excel in order to get what you want in your toolbar. So you can go into YouTube and figure out how to get my toolbar.
What page was that on again?
Oh, the problem is on page 102.
Okay, thank you.
You're welcome. So we debited cash and we credited service revenue. Now on September 2nd, we purchased land with a long-term note. So we borrowed money to purchase land. Someone give me my journal entry.
Land is first with a debit.
Okay, land is first. Land is first because it's a what? Why is land first?
Increase in debit.
Good. I increased an asset, and to increase an asset, we
Debit.
debit. Nice job. For $6,400. Now, how did I get the land?
Signed
Or on account.
Good. I borrowed the money, right? And it was a long-term note. I didn't just borrow it for 30 days. It's a long-term note. So
Accounts
again,
payable.
I'm going to increase because it's a credit. And I'm going to credit notes payable. The difference between accounts payable and notes payable is notes payable is a more formalized agreement and usually is interest bearing. In other words, you'll pay back the principal plus the interest for $6,400. Stop me. I'm going to keep going. Stop me if you've got a question, okay? So September 4th, we received an invoice. So we received a bill in the mail for advertising that appeared in the newspaper on September 2nd. So I received an invoice for advertising. So what happened?
You're debiting advertising expense.
Good. I incurred. Notice I used the verb incurred. I incurred an expense. How do we increase expenses?
Debit.
Debit. Good job. So I'm going to debit advertising expense for 500. Now, have I paid for the advertising expense? Did I send cash or did I just get the bill in the mail?
Just got the bill.
I just got the bill in the mail. So I owe. What account do we call it when we owe?
Accounts payable.
Accounts payable, which is what kind of an account?
Liability.
Good. How do we increase liabilities?
Credit.
Credit.
Credit. On September 8th, I provided services to customers, but notice the phrase on account. Notice the phrase on account.
So would it be accounts receivable?
Okay, very good. I've got customers that owe me money. So I have the right to receive money in the future. So I'm going to debit accounts receivable. What kind of an account is accounts receivable?
Asset.
An asset for 6,000. And why do I have this accounts receivable?
Provided a service on account.
Good, because I earned revenue. I earned revenue. How do we increase revenue?
Credit.
Credit. So I'm going to credit service. Now I had already credited service revenue up here. So I'm going to give you just a little Excel hint right here. If it's a Mac command, if it's a whatever you call those other computers, notice I'm dissing Windows. If you see up here, I had already credited service revenue. And if I don't feel like typing again, I can hit Control C or Command C, and then come down here and hit Control V or Command V, and it will automatically paste it. So your copy paste shortcuts are Control C, paste is Control V for $6,000. Now on September 10th, I purchased supplies on account. So what is my journal entry?
Supplies being debited.
Good. I'm going to debit supplies because what kind of an account is it?
Asset.
Asset. Good. And 1,100. And what am I going to credit?
Accounts payable.
Very good. Because of that phrase on account, it means that I'm going to pay you later. So I'm going to credit. Now I can just go up here because I've already used that account. And you see how easily without typing, I've got a credit to accounts payable. Of course, you can type it, just trying to show you some commonly used shortcuts. Accounts payable is a liability. And to increase liabilities, come on, class. To
Credit.
increase liabilities,
Credit.
Credit. Good job. September 13th, I pay $4,000 on that long-term note. Do you remember up here when we purchased the land? This transaction right here? So I owed $6,400. Well, now I'm going to pay $4,000. I'm reducing my liability because I'm paying $4,000 on what I owe. So how do we reduce a liability, debit or credit?
You would debit notes
Very
payable.
good. So I'm going to debit notes payable for $4,000. And what would I credit?
Cash.
Very good. That asset cash went down because I had to use cash to pay. Now on September 18th, I received 5,000 from customers on account. You remember these customers right here that I performed services for, and I said, pay you, and the customer said, pay you later? Well, now some of them are paying me now. So I received $5,000 on account. What is my journal entry?
Debit accounts receivable, 5,000.
Did accounts receivable go up or did it go down?
Down.
Accounts receivable went down because since
Cash would be
customers
debit.
pay me, they pay me less. What kind of an
Okay.
account is accounts receivable?
Asset.
How do I
Asset.
make an asset go down?
Credit.
Credit.
Credit. So what is my debit? What did I get? What did my
Cash.
customer, good. So cash is an asset that went up for $5,000. And all I'm doing here is, since I know 5,000 is going to go here, I'm just using my shortcuts, Command C, Command V. And I'm going to credit what account?
Accounts receivable.
Accounts receivable. Accounts receivable is an asset. That asset went down because my customers owe me less money. Both cash and accounts receivables are assets, and we call these an asset exchange. One asset went down, another asset went up. On September 20th, I paid my rent of $900. So what's my journal entry? What am I going to debit?
Debit rent for 900.
Okay, I'm going to debit rent expense because it's an expense that I incurred in order to generate revenue. And to increase expenses, we debit. What's my credit?
Cash.
Cash. Because I use cash, it's an asset, we make it go down. September 30th, I pay my utility bill of $2,000. When I'm quiet, that means y'all know the drill. Give me a journal entry.
Utilities expense.
Okay, good. I'm going to debit utilities expense. And my utilities were how much? And what am I going to credit? I paid them. So what happened to my cash?
Cash.
Good. Cash went down because I paid them, paid my utilities. So cash goes down. To decrease an asset, we debit. Now I pay my employees. What's my journal entry?
Salary expense.
Nice job.
Debited.
So I debit salaries expense. That's still not spelled right. Let me try again here. Okay. So we debit salaries expense, and what am I going to credit?
Cash.
Cash. I know I want my paycheck. Well, not in literal cash. They direct deposited my account, but their cash went down. The University of Tampa's cash went down, and my cash went up. So salary expense, the cash went down for the company, so we credit cash. Now here we have a dividend. So now we're distributing some of our earnings to our employees.
Dividend.
Good. So debit dividends.
Would be debit, I believe.
Debit dividends because it's making retained earnings go down, and to decrease stockholders' equity, how do we decrease on the right side? How do we decrease stockholders' equity?
Credit.
Debit.
Debit, okay? We increase by crediting, we decrease by debiting on the right side. So I'm going to debit dividends, and then what am I crediting?
Retained earnings.
When I debit dividends, and hold on to that thought, because you're going to understand in chapter 3 when we do another step, that when I debit dividends, it has the effect of decreasing retained earnings. Just hold on to that thought, and we'll finalize that concept in chapter 3. Okay, so just be patient. So we debit dividends because it's going to decrease retained earnings. To decrease retained earnings, which is a type of stockholders' equity, we debit. Now, what did I give the owners? When I distributed the dividends, what did I give them?
Cash.
Cash. So we'll credit cash for $1,100. Okay. After we do our journal entries, what do we do next?
General ledger.
Good. We have to post them to the general ledger. Now, when I go to my general ledger sheet where I've got each of these accounts in a T account, see, I've got each one of the accounts in a T account. I am going to utilize good Excel techniques here. Okay, so I'm going to go back to my journal entries, and I want to post each one of the journal entries. And the first one is a debit to cash. So I want to put this 4,700. Alyssa, remember I said debit was on the left and credit was on the right?
Yes.
Now we're going to apply that. Okay, so I debited cash for 4,700. So that's going to go on the left side of my general ledger. Okay, now this is an Excel skill that you must learn. So I'm going to go into general ledger, and I know that I'm going to debit cash. Now I could type in 4,700 right here, but I want to efficiently use Excel. So I'm going to type equal. Notice my f of x right up here. I typed in equal. Then I'm going to my journal entry, and I'm clicking that $4,700 debit. All I did was click on it, and then I hit enter. Isn't that cool as shit? I mean, that is cool. And like right now, I could have easily typed in the 4,700. Look at what it's, when I click on the folder, look at what I didn't type in. It's telling me that this number came from the journal entries worksheet from the cell C3. This is called cell referencing, and you must learn how to do cell referencing. So what I'm going to do is I'm going to highlight that 4,700 because I've posted it. Because in order for my trial balance to balance, where my debits equal my credits, I have to make sure that I've posted every single journal entry in the right spot. So now I've got service revenue is a credit. So I'm going to go over to my general ledger. I'm going to find service revenue right here, and it's a credit. So Alyssa, what side is it going on? If it's a credit, what does credit mean?
On the left.
On
left.
What? No, debit means on the left. Credit means?
Sorry, on the right.
On the right. So on the right side of the general ledger, I'm going to hit equal. And I'm going to go to this 4,700 credit. I'm going to click on it, and then I simply hit return if you have a Mac, enter if you have that other kind of computer, and it put in the 4,700. So I want you to go through each journal entry and post to the general ledger. I'm going to highlight the 4,700 because I posted it. Now I'm going to go to land, which has a debit. And I'm going to put equal. And then I know my notes payable was the credit. And equal. And I have now posted this journal entry. Now I'm going to be quiet now and I'm just going to be posting to my general ledger using cell referencing. So I want each of y'all to do that. Okay. Is everybody posting? Because remember, you're going to need to upload this Excel file. Those of you that don't have an Excel file, if you're using it, whatever you're writing on, I'm going to want you to take a screenshot of and upload your screenshot. And those of you that are doing it in Excel, remember, upload your Excel and I can give you feedback on your Excel techniques. So now I'm going to go into advertising expense. And it had a debit. Accounts payable. Accounts receivable and service revenue. Is everybody posting okay? Now, if you have two, like I do in service revenue, just put it underneath the one that you've already posted, obviously. Being quiet means that you're doing your work and you're doing okay. Supplies and accounts payable.
I don't see notes receivable on the T-balance thing.
You should have a notes payable, not a notes receivable. Which one did you have a notes receivable on?
Payable, it's for the 13th.
Okay, yeah, no, that's notes payable because we were paying on that note from the land. How's everybody doing with the cell referencing? Are y'all already not talking to me? Is everybody doing okay with the cell referencing? I really want to make sure you understand that technique, that skill.
Yes, ma'am.
Yes.
Yeah.
Yes, yes, everybody. Yes, yes. And if not, let me know.
Something we have to memorize, or will we kind of?
Somebody was talking. I've got feedback.
Can you hear me now?
No, it's all feedback. Try again. Hello?
Can you hear me, or should I just?
No, it's feedback. Go ahead and send it to me in a chat, and I will stop sharing my screen. Can you send it to me in a chat? Your question? Hello?
Oh, where did you say that we should put accounts receivable again?
In accounts receivable. Was that?
Can you open the T-charts real quick?
Yes. Did that help? Oh no, Caitlin asked, is there something we need to memorize? No, in Accounting 202, you first have to learn this by memorization. During an exam, because this is, synchronous remote, your exams are going to be obviously open book. I can't control what you're looking at, Proctorio can, but there are no cheat sheets. The exams are going to be where you need to understand this material and apply it on an exam. And you'll have books and notes around you, but if you're having to rely on them too much, you won't have enough time to take the exam. All right, once you finish posting, Anthony asked, you always need to look at, and then a cheat sheet or something to look back at. These are critical steps in the accounting process. So if you don't understand the steps in chapters 2 and 3, then you're going to have trouble the whole semester. So this is something that you need to learn and not just do it for fun so you have to know it. All right, Anthony asked, what should I do when I finish posting to the general ledger? Go ahead and calculate the ending balances of each one of your accounts using Excel techniques. Let it add for you. So let me get through posting, and then you'll put it on your trial balance, and I'll show, and using cell reference. Okay, Anthony? So let me finish posting real quick so that we can get there. And I will show you sum up your debits and sum up your credits, and then take the difference between the two, and that will be the ending balance in your account. Rent expense and cash.
Professor?
Yes.
For the rent expense and debit, is that a 930 or is that 950? Because I took a picture of it, so it's not coming clear for me.
Let me.
Sorry.
That's okay. Let me finish this right here, and then I'm gonna look at what question and. Okay, on which one now? The rent expense?
Yes, under debit. Is that a 930 or 950? I wasn't sure.
900.
Oh, it's a 900. Okay.
Yeah, it's on September 20th, and we paid 900 for rent. Is that better? Thank you. You're quite welcome. All right, then salary expense. Do y'all like that cell referencing technique? I hope so, because you need to. Now, Anthony, did you put in your beginning balances? Okay, so Anthony, you asked, what do I do after I've posted all of my general ledger accounts?
Yes, ma'am.
Okay, you do need to calculate the ending balance, but if you look on page 102 at your problem itself, and we will finish this on Thursday before we get into chapter 3. So the first thing that we'll do Thursday is we will finish this problem, okay? But before we go, and I will make it where the due date we'll just finish it on Thursday and upload it on Thursday. And then we'll get into chapter 3. So make sure you read chapter 3. Don't forget your chapter 1 Excel is due on Thursday also. All right. Do you see in the problem on page 102 that they had the beginning balances? We did the transactions for September, but do you see that each one of the assets, liabilities, and stockholders' equity had a beginning balance? So we need to put those beginning balances in the account. Like cash had a 6,500 beginning balance, so I just need to manually enter that.
For every account, we're going to put that in, correct?
Exactly. So accounts receivable had a beginning balance of 2,500 debit. So I'm going to put in the 2,500 debit. Supplies had a 7,600. Land was 11,200. Accounts payable was a 7,500 credit. So you got to make sure that you enter in the beginning balances. And common stock is 9,000 and retained earnings is 8,300. All right, so I have now posted each one of my journal entries to the T accounts, and I have posted the beginning balances. Now I need to prepare a trial balance. So I need to calculate how much cash do I have on hand. Whenever you're in Excel, you put your calculator in the safety deposit box at the bank. Whenever you're in Excel, never, 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 ever use a calculator. Excel won't make mistakes. So what I'm going to do is, do you see the sigma? Do you see where my cursor is? The sigma that is auto sum. So I want it to add up. And do you see it automatically highlighted the numbers above? Now, if I wanted it to just add up some of it, I can adjust. Okay, but I want it to add up the entire debit. And so I hit enter. And then I can copy and paste that formula over to the credit side. Okay, I didn't have to do the formula again. Notice the formula is sum B3 through B8, but all I did was copy and paste the formula because Excel copies relatively. You see, this one is the sum of A3 through A8. This is the sum of B3 through B8. Excel copies relatively. So I'm going to, all I have to do is copy that same formula to each one of the accounts. And I'm doing it on the debit side and the credit side. And all I'm hitting right now is Command V on each one of these accounts. Because I've already done the Command C, copying that formula. Remember, it copies relatively. So now I'm hitting Command V, and look how easy this is to do. $15 through $20, yep. And look how easy it is to do once I've done the formula. Just to copy that formula to each one of the general ledger accounts, also called T accounts. Command V, Command V, Command V or Control V. All right, so now I have a sum of each of the debit columns and each of the credit columns. You see how I let Excel do the work. Now I'm going to, we've got 1 minute. I want to figure out what is the balance of this account. Well, the debits are higher than the credits, so I'm going to say it's going to be on the debit side, which is the left side. I'm going to put equal that cell, and then I'm typing minus, and I click on the 12,000 cell and hit enter. So look at the formula that I have there, the debit minus the credit. On the service revenue, the credit is higher. So on the credit side, I'm going to put equal credit minus the debit. Now I know that there's 0 there, but, and so the balance of my service revenue is 10,700. So go ahead and calculate the ending balances of your account, of your accounts. And then on class on Thursday, we will do the trial balance. Okay? Is this making sense? So we saw a we learned debits and credits. We saw transactions. We learned how to do the journal entries. We learned how to post the journal entries into the general ledger, the 4T accounts, using Excel. And we've learned how to calculate the balances of each one of the accounts. Okay, so I will see y'all on Thursday. We'll quickly finish this and then we'll move into chapter 3. Chapter 3 is a booger bear, so read it twice.
Professor?
Yes.
Just quick thing. I put in the group chat that I was going to start a study group for the class. So if any of you guys are interested in that, you could just take down my number and hit me up and we could, you know.
I'm going to stop sharing my account. I'm going to go into sharing again, but I want to bring up, not that. So I want to bring up, if you look, go into Blackboard so I can tell you this real quick. Go into Blackboard and down at the bottom, do you see email? So down at the bottom where tools is.
Email link.
Email link. All right, that email link, once you click on it, then you can email anybody, you know, you can email the whole group or you can email student by student. Okay, so Alyssa, was that Alyssa?
Yes, that was me.
Study group. Okay, if you want to be in a study group with Alyssa, email Alyssa. You have her email through that email link. If somebody else wants to start one and you want to send out an email to the whole class, you can do that. Okay?
Thank you.
You're quite welcome. And Alyssa, thank you for volunteering. I'm sure others will want to because y'all have different, you know, meeting times. Okay? All right, peace out. And everybody knows where we are. Please, please, please read chapter 3. Don't forget your chapter 1 Excel is due. Did I say please, please, please read chapter 3? All right. See y'all.
Thank you very much. Have a good day.
Thank you. Y'all do the same. I'm so happy to be back with you, and I'll see y'all on Thursday.